This is actually the third video in a row that I have done on Circle Internet Group, and I'm doing that because I've learned so much from it that I want to share with you, and share with you the power of artificial intelligence and how it can give you an up on the market. What you see here is a chart of Circles from TradingViews, and you can see it IPO'd back here on June the 5th. Its IPO price actually was set at $31 a share, and its low that day was 64. So when the bell rang, the first share opened, let's see, at 69. It came down to 64, and then as you can see, it got as high on that day as 103, and then it proceeded over the next several days to go up to as high as 298, let's call it $300. And then what happened was, and what I've got over here is Samantha's research on Circle, and what it told me was that it spiked up here, and then right in here it did a letting go of some restricted stock that came to the market from its employees and its original IPO investors, and that brought the price down from where it was comfortably at about 261 to where it found a new comfort zone of about 180. That kind of settled off, and it came up and got back up to about 260, and then it came down again. And this was, again, as is explained in the research, as a result of additional shares being made available to the market, and then some decreasing confidence in the stock, and it's now down to 118. Samantha goes on to tell me that this stock has tremendous potential because it is in a category, it is the top in its sector as a crypto fintech finance. It is the world's second largest stable coin, USBC, with 61 billion in circulation as of second quarter 2025. Unlike many of its peers, Circle is profitable and heavily regulated, making it a compliant leader in the stable coin. Its main competition is Tether, which remains larger in supply but less transparent. The new USA stablecoin legislation, the Genius Act now law, Circle regulates status gives it an edge. It is expected to grab the market share and from less compliant competitors. So it paints a very, very sound picture. And if you read it, you would say this is going to do well. The stock recent pullback of 22% offers a better entry, and multiple Wall Street analysts covered buy signals aggressive targets of 230 to 250, putting it back up close to where it was just short of its IPO. So we would look at this and we would say, this is something I need to invest in. And I, upon finding it, felt the same way. I then, through the analysis, I find that it is profitable. Circle is already profitable, and among recent tech IPOs, net income was $155 billion in 2004 on $107 billion in revenues, a 9% net margin. It posted another $64.8 million in profit in the first quarter of 25, underlying the profitability, improving the marketability with rising interest rate. Total revenue jumped 53% year over year, and with $658 million. Adjusted EBITDA came in at $126 million, a 50% margin on net revenue. It just doesn't get much better than that. It goes on to say that it is remaining profitable, and adjusted EBITDA grew by 52% year over year, and that's 53% revenue growth. As far as its liquidity, it gets a grade. Circle is very well capitalized. After its IPO of March 31, it holds $848 million in cash, plus $274 million in cash equivalents. It just doesn't get any better than that. And then we have, it has minimal debt. One important consideration is Circle does have a huge off-balance obligation, redeemed USDC $1 for $1, over 60 billion outstanding. However, these stablecoin reserves are fully backed by segregated assets, mostly cash and U.S. Treasuries. So it's a good stock, and we should be buying it, particularly with it down like this. And I would have been buying it except for one little thing. On the other hand, insiders are heavily invested in long-term success. Founders Jeremy Allery and Sean Neville hold 39% of the shares, Class B voting, and employees received, this is restricted stock options, grants pre-IPO, vesting until liquidity events. This created $424 million in stock comps expense in Q2. Those expenses were vested at IPO, which depressed the GAAP earnings, but aligned employees with stockholders. This is very important because now the employees benefit when the stock price goes up. Again, this just can't get any better. But let's page down and let's find this within the analysis that nobody knows. Okay, post-IPO total shares are 209 million shares. Okay? 209. Keep that number in mind. One upcoming factor is lock-up expiration. Insiders and pre-IPO holders are typically restricted from selling for 180 days until early December. The exact day is December the 2nd, 2025. When these restricted stock release occurs, a wave of shares, potentially 150 million of the 209 million, could become eligible to sell. Okay? That's 70% of the overall float of stock has not been available to the market to sell, but will come to market on December the 2nd, 2025. While not new dilution, it may feel like a supply hits the market. This could pressure the stock short term. Investors should be aware that of that December lockup expiry and monitor insider selling. Okay? The market doesn't know that 70% of the available shares will come to market on December the 2nd. So what do we do as investors? We now hold this knowledge. But what more importantly, what you need to know is if you heard this, you are now in the minority. Everybody else, 90% of the retail investors are looking at this and saying, this is a buying opportunity. But I think, and if you go and look at the options, you'll find that there are some people who believe it's going back down to 60, where it IPO'd. They believe it is. And I would not be surprised at all, because as I investigated further, this is what happens when this kind of flood of shares comes. So what I did was I wanted to put all of this into an easily understandable method of understanding. I've given you an insight. I want you to listen to Bard and Samantha explain this. Explain exactly what this company is about and what is possibly going to happen. And then I want you to hear what they'll give you 3 examples of when this has happened before and what happened as a result of this flood of 70% of the available shares coming available on December the 2nd of 2025, so that you can make a good investment decision. And then what I ask them to do is illustrate it in a video. And I want you to, now that you have seen this, I want you to gain a better understanding of it. So I have created a link to both the podcast. It's about a 20-minute podcast that explains this 24-page document. Excuse me, it's a 39-page document. We're only on page 4 of it. And then I created a short 6-minute video so that you can see this. Why am I doing this? Because I want to give you the opportunity to have this kind of knowledge every day of your investment career, so that you can know what you're buying and understand the finances of it. And you can have a source where you can go and make yourself an educated investor, as rather than a victim of what you see here in this chart. I know that there are people, what is it? Here we had 9.3 million shares traded today. I know that there's a big percentage of them think that this is going right back up to 280 in a very short order. I know that. I know that there are a lot of people who clicked on that and said, oh, they had estimated earnings of a minus $1.10, and the surprise was it was 300% higher. But we know that was because of these other shares that became available and was charged off against, it was a one-time event, and was charged off and created that illusion of non-profitability, when in fact they were profitable. You need to recognize this is what happens in the stock market every single day. People invest and do not know what they're buying and what the financial structure of what they're buying. If you buy any stock from this day forward without getting someone to interpret their balance sheet, their income statement, their liquidity, their earnings capability, if you buy any stock without knowing their efficiency, you need to know how efficient are these people at making money. What is the ratio of employees per profits? And per profit employee jumped to $173,000 per employee. You should know that, so that you know how close are they to scale. How is that going to increase in the future, and how will that be reflected in the stock price? I want you to go into the link, into the description, click on the link that says it will give you access to the short video and to the podcast, so that you can experience what being an informed investor feels like. I want to do this for you. I only have about 100 seats left on the bus. So if this is what you want, and you're willing to pay $60 a month for this kind of advantage, join our tribe.